Good morning, trading world. It is December 23rd, 2023, the last trading day before Christmas. And where is that Santa Claus rally? It is 8:20 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. I was trying to stay away from the desk as much as I could. Then I kept receiving text alerts. So I had to jump on the mobile to try to get in position to surf the last wave of this mudslide. As I said yesterday, the two stocks to watch were Tesla and Apple. Tesla broke through its 134 support and didn't look back. Now we are in the hole, and I don't like shorting in the hole. But the reason I believe another wave down hits today is because Apple held it together above its 129 Maginot line support. There was also a good distance it had to travel to get to that Maginot support line, and it did travel the distance but seemed to have used up its energy or steam getting down to the line and couldn't push through it yesterday. So maybe today the draw from the rest of the market and the continued destruction of bonds push Apple over the edge today, along with the data drops from durable goods and monthly GDP at 8:30 a.m. today. If this happens, I am not going to even pretend to know the levels that we could drop to, because at that point we will be in an all-out panic flush sale. The kind of blood in the street panic, get me out at any level, margin call event that could cause a temporary bottom that could last for a couple of months. At that point, let market strength and VIX be your guide. I imagine if we get down into the mid to low 360s, VIX will definitely start to wake up. If the 8:30 a.m. reports give us enough push to open negative, it's on. I won't know the bottom, but if it plays out like this, I will go long on some naked premium selling and as close as I can to the close, and probably throw in a few bull put spreads as well, but not a minute before 3:40 p.m. That's if it plays out to where we open negative on the reports. Now, if this does happen and we, open negative, how should we surf this event? The best way would have been to get short at the close yesterday. But if you didn't, here's what to do now. First, if your normal amount of risk, given average or normal, your risk for your account should be 1% per day, meaning the amount of moves or positions that you take and put at risk shouldn't be more than 1% of your account each day. So let's find out what this 1% of your account is. Do the math. Find out the dollar figure, then subtract the risk of current open positions out as well of that 1%. If we open lower than the previous close, I would give the market maybe 10 to 15 minutes to try and fill the gap And then I would start to buy as many 0 DTE 50 delta puts as I could inside that risk amount that we calculated earlier. Then as long as we stay below 385, 386, I would close my eyes and start working to cover the order 15 to 20 minutes before the close today. This is going to be the best way to surf today's action if it plays out and we get a negative open today. We drop on the reports because we're up ever so slightly on the day so far. Let me see. Let me look at a couple things here. Okay, yeah, we are still ever so slightly and still kind of climbing. Reports come out at 8:30, which is pretty close to here, so that's pretty much what to do today. Now, remember, we are in the hole, so this could play out a completely different way. We could pop and rally from here and not look back. So, if we pop above that 386, 387 level, go ahead and get out of it. Cut your losses. Move on. You know, emergency averted or whatever. But that's pretty much what to look for. And believe me, I do not like shorting in the hole, and I hate giving advice like this, shorting in the hole. So that's why the most important thing is, whatever you're putting up on those 0 DTE options, put options, make sure it's well within your risk and the amount that you can afford to lose completely today. All right, moving on to the key levels. Give me a minute to bring those up. All right, here we are back with the key levels to watch for today. On the resistance side, this is going to be key. 381 to 382 area. Our jack resistance level. If we manage to, the data report kicks in and keeps us below this, it could be a long day today. Queen resistance, 383 to 385. I don't really expect to get up there if it happens the way that I'm thinking. King resistance, 387 to 395. Keep it in mind for next week. On the support side, first level of support, jack support, 380 to the 378 area. Queen support, 376 to the 374 area. Look for a little bit of a bounce here at some point in time today, but if you're holding and you're holding more than one option, you may want to take some profit here, but it's going to be a long day. Hold to the close. Close your eyes and hold to the close. Our king support is 371 all the way down to 364. Again, I'm not going to even pretend that this level means anything if we get the type of an event that I think. But that is a target point of mine, that 364. That is the main, that is an extreme, the main channel that we're below us. That is the lower part of the main channel below us. So again, that would be my best guess and target. Now, the main thesis for today is bearish, closing below the 380.72 with a projected target lower between 379 and 364. The alternate thesis is bullish, closing above the 380.72 with a projected target high of between 380 and 395. The current major channel we're in is 397 all the way down to 379. Remember, the major channel below is 379 all the way down to 364. We do have dissonance between the technical side, which is bullish, and the quant side, which is bearish. Market strength and breadth gapped down at the open yesterday from almost as high as you could be right to almost as low as you could be. We got some push up at the close along with some strength overnight that could see us open in the middle as far as strength and breadth goes, which is not good, because think of it like this: the higher those two indicators open today means the more space we have to fall today. So, putting everything together, this is what I'm seeing in my mind. I haven't done scenarios this week, but this is what I'm looking at that could happen. We come into that report and bam, we get a straight drop back below, giving us kind of a negative open, not a kind of, but giving us a negative open, and to kind of chop around here for a moment, and we get kind of a push back to kind of fill the gap, and then it is on for the rest of the day. Stopping here, we get this is a magical trend day down, where we continue all the way all day. And so this is why I say, on a day like this, close your eyes, hold to the close. That's what I think will happen today. We'll see. But either way, really important to calculate your risk. Don't put up more than 1% of your account. You don't want to be in a bad position, because remember, we are in a hole. I do not advise and do not like shorting in the hole, but right now the probabilities are so good, I am willing to risk something that I don't mind losing to get in on the probability of this further mudslide. That's my pre-market for today. Be very careful. I hope this helps. Risk over direction. Your most important job as a trader is to protect the capital that you already have, and we do this by knowing and understanding the risk that we have on in each position. And we manage that risk in accordance to our account size. Happy holidays to everyone. Wishing everyone a Merry Christmas, Happy Hanukkah, and a safe holiday. Wishing you a positive trading day today. This should be one for the record books today, as far as the amount of money that you could see today. Merry Christmas on that note. Happy holidays. Have an excellent trading day.